In this video, we're going to take a look at bullish and bearish abandoned baby patterns. Now, these are modified in Forex because they need gaps, like some of the other patterns that we've talked about, but they are powerful patterns, so we don't want to ignore them, obviously. And what an abandoned baby is much like a morning or evening star in the sense that it is a 3 candlestick pattern. And to be honest with you, I've always kind of looked at them as the same. So this is a bearish one. You'd be in an uptrend here. You'd have the baby, the abandoned baby, because there are gaps. And in a downtrend, you would have a bullish abandoned baby because you would have the first candlestick would continue the downtrend. Then you would have a gap lower. And then you would have a turnaround. And that would be obviously a very bullish sign because the sellers just couldn't keep it up. And that's essentially what you're looking for. Now, in Forex, we have these wicks that'll come into play. And this is my example here of a bearish one because you have the body of the candle. You have the next body a little higher. Then you have the third body much lower. A break of the third candle is a selling opportunity. We go right to where you would expect support and then turn around. So this isn't a trend-changing pattern in this specific instance, but it does show some weakness, and it does end up being a profitable trade. Remember, you always have to have an exit point when you place a trade. It was a 1-to-1 target, so nice little counter trend trade. If you take the wicks out, it is the same pattern. We don't get the gap down below, but unfortunately, that's one of the adjustments we need to make. So in that sense, it's traded very much like an evening star would be in Forex that we discussed earlier because of the modifications necessary. Now, in this case, you could make an argument for an abandoned baby in the bullish sense in the Swedish krona because we were negative. We ended up forming the little candle there, and then we rallied, and you can see that we rallied a little bit. And again, this wasn't a complete trend reversal, but this was a pullback. So quite often you'll see that with these candlesticks in the modified Forex version because you have to ignore the wicks. So what does that mean? That doesn't have the same power as gaps do on a daily chart in a stock market, for example. So a lot of times it doesn't mean an impending trend change. It just means, so for example, if you're short and you see this, you may want to tighten your stops up. That's another way to use it. Sometimes when you see a pattern working against you, then you know that once it gets fired, and in this case it would have been at the top of the third candlestick, you have to be a little bit more concerned about your short position and the dollar against the Swedish krona, for example. There are a multitude of ways of using this information. Remember that just because it's a bullish sign doesn't mean that you necessarily have to buy. Sometimes it is an excuse to move your stops up. Something that you should always be aware of, that the market may move against you, obviously. These are a bit difficult to trade in Forex without doing a little bit of research on modifications, but they do happen. The main thing is basically, you want to see some type of an attempt to go higher. You want the body to be above this candlestick here and then a return. And, since you don't get the gap, really in Forex, it's going to look like this. But it says the same thing. It says that the buyers have run out of steam. And this might have a candlestick wick here, and this might have this here, and that there, and that there, and that there. But it says the same thing. It says that we are rolling over. Higher time frames mean more as per usual. And again, it doesn't necessarily have to mean a trend change. And a lot of time, the abandoned baby really doesn't unless it truly has the gaps. And, that would be like on the daily or weekly time frame. And I can't imagine that happening in the Forex world. I couldn't even find an example if I was looking for one. But we do have our modified on Forex charts that gives us an idea that, I'd say that it's an imminent pullback. Measuring that against the morning star pattern, which has 2 long sticks and then the little body there, that to me is a much stronger signal, and it does tend to work out. for a much bigger reversal. So it's probably the weaker of the two patterns, but it is something worth paying attention to.